Hi, Kerry here with Best of Us Investors. Got something special for you today. I was a retired financial advisor. I sold my practice in 2005 and I sold it to my son, Trent. This is Trent here. This is he and I on National Hat Day a couple of years ago. And so when I sold the practice, he took it over and built it even larger. And then actually he sold it himself just last April. Well, I've convinced Trent to come on and share his visions of the stock market with us. And he has a different view. He has a broader perspective. He doesn't have the same objectives as I do. And so what I want to do is make this the Everything for You investment channel on YouTube. And so I'm going to be inviting a number of people to come in and do presentations on a weekly basis. Trent has the 3 p.m. Sunday slot because I think he will give you something to think about every Sunday relative to what you're going to do in the investment markets the following week. So let's now go share a cup of coffee with Trent and see what he thinks about the coming week in the stock market.
Best of Us Investors presents Trent Grinkmeyer.
Did you know that 1 in 67 job listings pre-COVID on LinkedIn were remote jobs? Today on LinkedIn, 1 in 7 jobs are remote. The world has greatly changed since March of 2020. And you're probably saying, duh, right? It has changed. It has rapidly changed in a matter of less than, 2 years. And it's also generated enormous wealth here recently in the last 2 years. And one of those wealth generating areas is the commodity market, the housing market, the car market. Car prices have skyrocketed. Housing prices have skyrocketed. And they are usually the leading inflationary item when it comes to inflationary numbers. And recently, the CPI number came out at 7% inflation. That's the highest since the mid-'80s. That's pretty stout, wouldn't you say? They've been talking about rising inflation for quite a while. You can see it in everything. The cost of everything you buy, goods, housing, cars, retail, all that kind of stuff. And they've been talking about how they needed to raise the Fed funds rate like a year ago. And now the Fed comes out at the end of last year and says we're going to raise interest rates 4 times in 2022, which if you think that through, that's 25 basis points minimum per rise. That would be 1% rise in the Fed funds rate. What would that do to the cost of money? But more importantly, what would it do to the economy? When the Fed raises interest rates, it basically is taking money out of the system. It's drying up. It's sort of like oil in your car. If your oil decreases in your car, there's more friction. This car has to work harder and slows down. Well, it's sort of the same effect when it comes to cost of or inflation. You raise interest rates, it slows inflation. It dries it up a little bit and brings it back down to normal numbers. But here's the problem, as I see it. If you raise interest rates in an environment that is slowing, because if you look at housing stats and new car sales, or just car sales in general, in the last 2 months, they have declined overall compared to previous 2 months previous months prior to that. So it's basically they're Johnny come lately when it comes to raising interest rates. Here's the other part of all this. Back in November, 4.5 million people quit their jobs, just left. The majority of those jobs were in the service industry and hospitality industry. And these people basically quit, but the question is, where did they go? And recently on a 60 Minutes episode, they were talking with the chief economist for LinkedIn. And she was talking about how these people have just quit and they're moving to better jobs. And now that we live in a remote world, we have the ability to work from anywhere. And what's happening is the workforce is now taking power over the providers of the jobs, and they're demanding more flexibility. They're demanding more ability to do work when they want to work, and most importantly, to work remotely. And if you look at some of the stats that they point out in this episode, the decline in the number of people in like San Francisco and New York has declined, whereas the increase in population in Miami, Texas, in southern states has increased. And the reason is because the cost of living is cheaper. You can buy a house in Greenville, South Carolina for the price you would pay to rent in San Francisco. Now, if you really start to look at this and ask yourself, well, if people are migrating and they're quitting their jobs and they're upgrading their jobs, that leaves a whole lot of job opportunities. There are millions of jobs available. I saw a stat recently where it's like 10.5 million jobs available versus 7.5 million people who are looking for jobs. Now that number may have increased since November, but the point is that if you're going to raise the cost of money and your economy is showing signs of slowing, aren't you just sort of putting gas on the fire?
I just got off the phone with a financial advisor I consult for, and they were asking, where do we go with this? Headline news of Wall Street Journal saying inflation is as high as it's been since '82. Fed is expecting to raise rates 4 times in the next 12 months. Where do I go? And I think this is one of those questions that is perplexing a lot of advisors and just a lot of people in general. Is the tech, the growth, high beta stuff going to continue to work? And I always just go back to, 3 years of up markets, S&P over 20%, 2 years in a row. I forget what 19 the S&P was. Q's the same thing, NASDAQ 100, same thing. The question is it going to continue? Why would it continue? Well, it would continue because of liquidity. Because over the last 3 years, liquidity has been injected, especially the last 2, has been heavily injected into the system. Now, the Fed is saying we're going to pull liquidity out 4 times this year, which means that at 4 times, at a quarter point apiece, that's 1% increase in the cost of money. And so that is going to pull liquidity out. It's like I was saying earlier, you pull oil out of your car is going to run hotter and eventually it's going to seize up. And I believe that is what we're experiencing. And as I told this advisor, you now need to start thinking, if things slow down, what are the essentials? Where is a safety play? And if you go back to January, go back to March of 19 and look at the German Bund. And in May, they started screaming about why are people buying bonds that you have to pay for because of negative rates. Why is that happening? Because the smart money was moving to safety. And now, if you watch the 10-year, and we'll probably get up over 1.8, maybe 1.85 on the 10-year on the yield, at that point, that's when I'm going to start adding to my fixed income position, because that's sort of that peak, the top of the selling side of it, and I'll buy, say a TLT or IEF and add that to my portfolio. But I'm looking out now, instead of 3 months, I'm looking at 6 to 12 months. And this behavior from the Fed is telling me this: they're going to suck liquidity out of the engine, or oil out of the engine, and things are going to start slowing down. And when the builder I spoke to the other day says, we have a shortage of nails, we can't find nails in my area, how bizarre is that, number one? And you look at the front cover of the Wall Street Journal yesterday, and it talks about how China is shutting down factories and cities because of this Omicron variant, and they're closing up the Nikes, the Adidas, the Volkswagens factories of the world. Samsung the same way. Micron having issues where they're getting their chips done there because of all of this. All of a sudden, and the ports are getting shut down. All of a sudden, things are going to start seizing up. So here's what my game plan is. This is not advice. This is not a recommendation. But here's my game plan. I've added the US dollar to my portfolio through an ETF. I've added investment grade bonds, the TLTs of the world, the IEFs of the world. And then I've reduced my tech exposure to all this. And so now I'm taking positions where I'm actually hopefully profit from a market going down. So I'm taking a put position on the S&P 500. That's my game plan. And if it works out, great. I got my risk management stops in place. I'm managing that. And oh, by the way, I've dumped the majority of my crypto stuff because of the commodity related kind of behavior it has, as it's demonstrated over the last month or so. I've moved away from that and got a small position in it, but the majority of my money, well, it's just doing nothing, sitting in cash. But I'm being defensive. I'm looking for those opportunities. All right, that's it for me. I hope this has been helpful. Always remember, I'm going to put some documents together and you'll be able to get them in the Discord. Carrie's going to head that up for me. But I'll put that together and make those available. But in the long run, always remember, be peaceful, make a smile, and live loud.
Thanks, Trent. That's really what I was hoping from you. And I think that's some good information, and you'll add a dimension to our channel that I have not been able to present. I want this to be everything that you want in a channel. Now, what you can do is, if you'd like to have more contact with Trent, he's going to become a regular participant on our Discord. That's part of our tribe. That's where we meet. And you can get access to him and his thoughts, as well as mine, on the Discord by going to bestofusinvestors.com, giving me your email address and your name, and I'll send you an invitation to join us on the Discord. If in fact, this is something that you really want to be involved in, go ahead and subscribe now to the channel. And if you'll ring that bell, that will notify you every time that we put up a video. Now, Trent isn't going to be the only additional contributor. I want to touch all bases of investing, whether you're a dividend investor, a swing trader, a day trader. I'm going to find the talent for you, and then I'm going to make them available on the YouTube channel, and then I'm going to insist that they join the tribe and make themselves available through the Discord as well. So that's where this channel's going. Let's see what's going to happen this week in the stock market. Is it a bear market? Is it a bull market? We'll find out.